today. Silver at $58 an ounce for a new all-time high. This makes 2024 the first year that silver has doubled. So huge moves happening in the silver market. I've been talking about this for a while. Gold also showing strong movement here at about $4,300 an ounce and climbing. Some of the ancillary metals, palladium also showing strength, and others. So still a very strong market. Metals shining through here. But what I want to do today is kind of take you through our entire investment process. So we're going to show you what to look out for in these big breakout trades, how to precisely enter into these stocks at times when you've got a good chance of a big and quick move. We'll show you how to find where to focus, how to hone in on the strength of the market, know exactly which stocks you want to look for. I'm going to walk you through our patterns, show you entry techniques, exit techniques, how to keep that risk very small, and hopefully how to make you a more profitable, more knowledgeable trader. So if you would, let us know where you're joining us from here. I'm in Fairhope, Alabama, down the Gulf Coast, so kind of a small town here in South Alabama. We typically have members from all over the world joining us for these. Excited to see all of you. So let me know now there in the comments, and if you would, go ahead and like this video. I would appreciate it, and we'll go ahead and get started. Covington, Louisiana. Pam's back. Hey, Pam. I need to text Lynn and see where my new truck is. Orlando, Northern Kentucky, Tennessee, Oklahoma, Fresno, Bradenton, Washington, Austria. Soul Trader, welcome. That's where they build the G-Wagons by hand. Spain, Ohio, Santa Barbara, Palm Bay, to be Burlington, Tennessee, Nevada, Ohio, all over the place. All right. Well, welcome, everybody. Welcome to the live presentation. Today, again, December the 1st, 2025, our first live session of the year post-Thanksgiving. Now, what you're looking at here is a look at the S&P 500 index. As you can see over here on the right scale, the pre-market price is about $4 lower than the Friday closing price, meaning we're set to gap down just a little bit. Not a lot. It's only about, 0.5% or so. If we look at the overall indexes, we'll see. You can look at the futures markets, about 0.5%, 0.9% in the NASDAQ. So hopefully we eat up this negativity in the first 5, 10, 15 minutes and rip higher. But this market has been one of the strongest on record. After the tariff situation back here in February and March that spooked the market, we have had a once in a multi-decade recovery here. S&P's up 40% since April and climbing. Big year in the markets, and really big in lots of other areas as well. Silver, as we just mentioned, ripping to new highs. Friday, Monday, highest it's been ever in the silver market. If we go back and look at like a 1-month chart, you can see the silver market over the last 5 decades, and the Hunt brothers kind of cornered the market back here in the 70s, leading to this peak at about $41 an ounce. It came crashing down, held in the 90s and early 2000s, ripped up with gold here in the early 2000s, pushed again higher in 2010 to $49 an ounce, came all the way back down here, and we are ripping once again. And I think we're going to see $100, $200 an ounce out of silver. That's why I've been stacking physical gold and silver. The gold market also showing a ton of strength. We called this breakout back here in March of last year. It has surged from around $2,100 to $4,200. We're looking for $8,000 to $10,000 an ounce out of the gold market over the next couple of years. We can talk about why we believe that's going to happen as well. Today, I want to focus a little bit more on the stock market and how to find these breakout moves. So there is a given pattern that we go to looking for breakout stocks, and this is our bread and butter. When you got a strong stock market, when you got the proverbial wind at your back. And right now, listen, the stage is set for higher stock prices. I know valuations are stretched. I know that we've already come a long way, but there is no fundamental reason that stocks would crash in the next 1, 6, or 12 months. There's no housing crisis. There's no rate hike situation. There's no pandemic. There's nothing that would lead to a big bear market. Right now, what we have is the Fed cutting interest rates, which pushes stock prices higher, into above average inflation, pushes stock prices higher. We have plus 3% GDP growth, pushes stocks higher. We have a once in a generational technological advancement in the form of AI, which pushes stocks higher. We have massive capex, capital expenditures, $600 billion plus from the Metas and the Googles and the Open AIs of the tech world, pushing stocks higher. So all these forces are bullish. They're pushing stocks higher. So, and you can see that. We've got a market that is sitting, as I speak, within a minuscule 1.5% from all-time highs. So any market weakness we've seen, these little dips, has been immediately bought back. These dips are bought back. These dips are bought back. It is showing the market is very strong. And so we want to be looking for places to buy. All right. Now, when you're focusing on stocks to buy, you want to be fishing from a stocked pond, okay? If you're trying to collect water, you're not just going to run around in the dark with a bucket. You're going to go to where it's raining and put your bucket there, right? We want to get where the getting's good. And people try to make stock trading harder than it needs to be because they're trying to find a needle in a haystack. Out of 8,000+ publicly traded stocks, they're trying to find that one little $2 stock with a great story that they're curing baldness or they have some technological advancement and nobody knows about it. It's going to rise. You don't need to do all that. All right? What I'm going to show you is what's known as swing trading, looking for stocks that we can buy with a realistic possibility of making 20, 30, 40, 50% over the next couple of weeks, maybe 2 months. Take a nice little gain and move on to the next one. I'm not trying to look for stocks to own for 5 or 10 years. I'm also not day trading and trying to buy in the morning and sell in the afternoon. I'm not marrying stocks, I'm just dating them. I'm looking for that window when I have a real edge, I can make a nice quick gain, then get the hell out and go on with my life and look for a new one. And so the way to do that is to focus on where the market strength is. Now, when you think about what moves stock prices, know this, it is not you and me. If all of us in this room took our entire accounts, put it all into Apple stock at the open, Apple might go up about 5 cents a share. What moves stock prices are large multi-billion-dollar institutions. It is hedge funds, pension funds, mutual funds, ETFs, endowments, the big multi-billion-dollar players, because the market is simply a function of supply and demand. Do not overcomplicate it. Yes, earnings growth makes people want to buy it more. Yes, good news or an earnings beat makes people want to buy it more. Yes, bad news makes them want to sell it, but that's just the cause. It's not the actual force that moves stocks. What moves stocks is basically just supply and demand. If there's more demand than supply, if more people want to buy it than sell it, the price is going to go up and vice versa. So your job as an investor and a trader is not to forecast, it is not to predict, it is not to outsmart Wall Street. Your job is simply to interpret. Interpret on the chart. See where those big guys are buying and see where they're selling. Because whatever they're buying is going to go up, whatever they're selling is going to go down. If they want it, I want it. If they don't want it, I don't want it. And I know this is contrary to how a lot of people have been taught. But I'll tell you this. At the end of the day, all we're trading is sheets of paper. Yes, they represent a partial ownership in the company, but that doesn't mean we've got a right to the cash in the treasury. I don't care if that company is sitting on the world's largest gold deposit. If everyone is selling, it's going to go down. And so you can be right or you can make money. And so what this is here is our industry strength indicator, and it looks at more than 40 subsectors. So you can see natural gas, pharmaceuticals, solar, lithium, mining companies, semiconductors, you name it. And it shows us which areas are rising the most over the last 1 and 2 and 3 and 6 months. And the reasoning behind this is very simple. If Goldman Sachs and Warren Buffett and the Notre Dame Endowment Fund and Cathie Wood, even though she's the worst, and the New York City Pension Fund, if they're all buying stocks in a given area, that sector is going to rise faster than the others. It's our cheat code to see where Wall Street is piling into. Because they don't invest like you and I. They're not going YOLO on a little given stock. They're betting on a big theme. They think there's a big energy crisis with AI and the data centers. We need power for those. The traditional markets aren't going to support it with the grid, so it's going to be nuclear, it's going to be natural gas, or it's going to be solar, and they buy up all the stocks in that sector to take advantage and profit from that trend. And so when we see which areas are rising most, that's our stocked pond. That's where we want to fish from. And if you'd done this in 23 and 24, you'd seen semiconductors, you'd seen software, because AI was the big boom. That's where the money was flowing. Earlier this year, it was nuclear, it was quantum computing, it was crypto. That's where the money was flowing. And we made 100 and 200 and 300% gains in a lot of those stocks. And so will there be, some little steel manufacturer that makes a huge move? Sure. Is there going to be some little tiny stock in, an off-the-radar group that makes a big move? Absolutely. But it's so much harder to make money there. So if you want this indicator, we give it away for free with the membership. We have a YouTube special. It is $5 for an entire year, no strings. Yes, that's $5, 100 or 500 pennies. We'll give you access to this indicator. You'll get the live sessions with me every single Monday for a year, another Thursday live session with our analyst over Zoom, in addition to access to our support team, some trade picks here, and there are tons of other resources. So if you're interested in that, click that link. It's just tradewithross.com. It's $5 for a year. If you're not happy, I'll give you your $5 back. I promise I'm not getting rich off this, just to kind of way to offset some of our costs. But click that link, sign up, and join us for an entire year. So when we have these groups, right, and here's how I build my watch list, we simply go, all right, well, they're going into pharmaceuticals. We see pharmaceuticals, biotech. We're looking for these big themes, and we're just going to focus on the top 10 or 20 stocks in each of those groups and look for the pattern I'm about to show you. All right? So one theme is, yes, the pharmaceuticals and the biotech, very linked. I'm also seeing a trend toward clean energy. As I mentioned, it was nuclear earlier this year. We made monstrous money on a lot of those nuclear stocks. But look at these top areas we're seeing here. We're seeing natural gas pop up. We're seeing solar energy. We're seeing the whole clean energy group. More clean energy, more solar, nuclear, uranium, electric vehicles, lithium, right? So out of the top 40 groups, a third to a half of these things are all in that clean energy group. And so knowing that, I know if I want the odds in my favor, if I want the best chance of making big money and riding this bullish trend higher, where the big guys are buying day after day and week after week and pushing these stocks higher, I want to be buying clean energy stocks. It doesn't matter if I'm a 30-year vet of the oil and gas industry. That's not moving right now. Clean energy is. So what we'll do is I'll build these watch lists of clean energy stocks and just run through them, looking for the ones showing strength that have good buy patterns. I'm going to show you one right now. Canadian Solar, we're going to try an opening range breakout on here in a minute. And we're going to look for ones to buy. I'm going to try to find a couple. This is a great example, Next Power here. And I've already drawn this out, so might as well use this as an example. This is the pattern we're looking for. Okay? Now, lots of people think they have the answer to trading stocks. There's more than one way to skin the cat, but this is the pattern I want to look for to buy a stock. Okay? Now, let me walk you through what's going on here. First of all, I want a stock that is going up. I know that sounds simple, but you wouldn't believe many people go, oh, look, it was at 80. Now it's 20. It's a good buy, right? No, it's not a good buy. They've dumped it so much, it lost 75% of its value. Nobody wants that garbage. Look for one that is rising, because a stock that is rising is one that is being bought. Again, supply and demand. Listen, when Warren Buffett buys a stock, it was just revealed he took a $4.5 billion position in Google last quarter. He doesn't just fire up his E-Trade account and go $4 million in Google. The demand he has, the number of shares he wants to buy, is more than the number of shares currently being offered for sale. Demand outstrips supply. So he has to buy a little bit every day, every week, every month to build up that massive position. If he tried to try $4 billion in Google in a second, the stock would shoot to the moon. And so they all act like that. It takes them weeks, months to build those positions. And when they do, what they leave is a footprint on the chart. They leave us clues that that's what's going on, and allows us to exploit it, to use our advantage as smaller retail traders, people who can buy, $10, $20, $50, $100,000 worth in a second, and get into these precise moments where it's likely to rise. So, number one, you got a big move higher in the stock. All right, that's just step one. This thing went up 72% in 16 days. Folks, stocks don't go up 72% in 16 days unless a lot of big heavy hitters are buying. So that's good. We got a stock we want. The clean energy boom, it was underway. We know the big story, right? These huge AI data centers, they need more juice than they can get from the grid. It's overwhelming. They're going to need more and more and more and more. Where's that going to come from? So that's the story. It's the fundamental reason, and Wall Street's driving it up. Now, after it makes a big move, after a stock goes up 50, 70+% in a couple of weeks, there's going to be some people that want to sell. I'm going to be one of them. I'm 72% in 2 weeks. I'm happy with that move. And that selling is going to push the stock back down. Now, if this thing is still in demand, if the big institutions still want it and they're buying it, they're going to take advantage of that. Buy up the stock on the cheap and push it higher. Now, again, they're trying to build up shares. They're trying to build, 100 million shares of this stuff. They're going to be buying for weeks on end. And they don't want it to go up too quickly before they get in. So oftentimes they will, I guess it's a bad way to put it, they'll kind of manipulate things to keep the price down. And they may have analysts downgrade the stock. They may release a story to Bloomberg or to Yahoo Finance or anywhere, about how the fundamentals are cracking or the stock's overvalued or the industry's in trouble. There's all kinds of things they'll do to try to keep that price lower as they're accumulating. But if it is in fact in demand, you'll see these big high volume spikes here where they're buying it back up. And so they're pushing it down with spoofing orders and things. They're down all this stuff. But what's happening is you're forming this shallowing pattern on the chart from left to right. And this one's not exactly perfect. I'll show you a really pretty one here in a second. But you see the idea, right? After a big move higher, and then it shallows and shallows and shallows going in. And what's happening here is the supply is being sucked from the market. They are buying up all the stock they can in this $40 and $50 and $60 range until nobody else wants to sell it for that price. They've bought up all the $50 and $60 and $65 stock they can find. The rest of these are sitting in ETFs. They're in long-term indexed mutual funds. They may be in somebody's 401k in a position they want to hold for 4 or 5 years. Every share is not out there with an open sell order. And so once they have gobbled up as much as they can, and they've shaken everybody out, and they've scared people out, and they've bored people out for 6 months. I mean, you bought this thing in May. It's October. It hadn't gone up yet. Eventually, they bought up all the supply. And so now if they want more, if they want to keep buying, what do you got to do? Everyone who will sell it at 60 or 70 has done so. What do you got to do now if you want more? You got to offer more money. All right, nobody else will sell it. Will you take 70? Will you take 75? Will you take 80? And that is what allows these stocks to make big and fast moves. Now, I want you to look at something here, okay? Just look at this chart. Let me take all it gets cluttered. Look at it from the breakout. Okay, so let's just divide this down the middle. Look at the amount of volume. Volume you can see down there in the bottom. It's just how many shares traded each day. Look at the amount of volume in these 2 months versus these 2 months. Do you see a big difference? Does it look like a ton of people in the last 2 months, suddenly there was huge demand for the stock? No. I would argue there was no more buying in October and November than there was in August and September. So why over here did the stock bounce around in a 10% range, and why over here did it go up 40%? Because the same amount of demand was chasing a smaller amount of supply. The same amount of potential buyers were there. But they're chasing a smaller float, less number of shares being offered on the market because over in here, they bought up a bunch of the supply. And this is why these breakouts are so powerful. You are taking advantage of the supply and demand dynamics. You are coming in with a scalpel on this chart, and you're buying at a place where the stock has a real possibility of making a big and fast move. So our buy point is right in here. This is what we're trying to do. Stock's making big moves. Wait for it to shallow, absorb the supply, tighten up, and then buy when it breaks through the high, when it goes through that supply level, and the stock is now free to run higher. Questions about this? And I want to make sure everybody gets it. By the way, if you haven't already, click that link below. There's a lot I can teach you in a year. I'm not saying I know everything, but we've got a mission to try to help 1 million traders and investors over the next year. I'm going to do everything I can to do so. Part of that is offering you the stupidest deal ever at $5 for a whole year. So click that link, tradewithross.com. I'll give you access to these indicators. We'll give you the live sessions every week. We'll give you some trade picks throughout the year, access to our support team to help you out, bonus reports, tons and tons of resources. It's the best $5 you'll spend. I know it's Cyber Monday, but you're going to buy a lot of crap today. Trust me, this is going to be $5 you're going to get back in fold. All right, questions. What kind of candles? These are just bars. You can use candles that's more familiar to you. It's all the same stuff. The difference is the candles kind of show you the fat area open to close of the day. This just uses little ticks. So this left side is where it opened. The right side is where it closed. I just think it's cleaner. It's less distraction. And what's funny is I've been doing this for 20 years. If you looked at my charts 15 years ago, they were all kinds of crazy with 10 different indicators. Now there's pretty much nothing on there. So that'll tell you what's important in the market. It's not these ridiculous indicators people try to sell you. It's the basics. Cup and handle pattern. Yeah, exactly. Cup and handle with multiple handles. Same idea, right? Is this a 6-month chart? Well, it's a daily chart. So yes, it is showing 6 months of trading, but each one of these candles is one day. Are you still buying NXT? No, I mean, I'm not, because look, my goal is just to get in and get out when things are good. And so if I bought in here, I would have been selling some in here. I would have probably sold, let's see. I've got some sell rules we can cover in a minute. I wouldn't quite get it. I would have for sure been out of the whole thing when it broke through this low. So it would have been, buying in here. You end up with a 35% gain in a little under 2 months. Nothing wrong with that. Does it change the stocks at all-time high? No, absolutely not. In fact, this was an all-time high right here. You want all-time highs because in order for a stock to make these big moves, it needs to make new high after new high after new high after new high. And so many people are scared of buying into highs, but that's where the action happens. Now, the same thing is going to appear off the lows when you have a stock that gets punished. So let's look at another clean energy stock, Green Plains, GPRE. Now, this stock, unlike the others, was near the lows in July. This thing, getting murdered. If you like buying stocks cheap, fine, but use this same pattern. This is a $44 stock. 3 years later, it's a $4 stock, right? So it looked cheap for a long time. You'd have lost your you-know-what on this thing, but look what happens here off the lows. Same principle applies. You have to absorb that supply until there is more demand than supply. Until the buyers outstrip the sellers, it cannot go higher. And so this is nothing but supply and supply and supply and supply until eventually you see the big guys start accumulating. And in Wall Street, they're investing based on formulas. They're going, all right, we think this industry is going to grow this much. We think this company is going to make 10 million this quarter, 20 million next. It's going to grow at X% for the next 3 years, then slow down. We're going to back out the assets. We're going to discount the cash flow based on the risk-free rate, all this stuff. And they put this thing in what's essentially a giant formula and then say, all right, based on our assumptions and what we see in the market and rates and all, we think Green Plains should be worth $20 a share in the next 2 years. So if it's trading at 4 or 5, that's a pretty good deal. And this is when they start accumulating. And so stocks have been doing nothing but selling, finally gets them buying. And it's just and then buying. And then buying. And see how it shallows from left to right. See how these pullbacks go from 50%. The next one was just 28%. The next one, just 9%. Look at how tight this is. 1, 2, 3, 4, 5, 6, 7, 8, 9. 2 weeks. It stayed in this tight little 8% range, and then it emerges, and that's when we want to buy it. That's where the supply is exhausted because it stalled here at 6. It stalled here at 5.5 or 6. It stalled here at 5.5. It stalls at 6, at 6, at 6. When it gets out, we want to buy it. And doing that would have let you ride this thing for a really nice move. And there's one other benefit to doing this, and that is the fact that you don't need to risk a lot of money. The biggest thing as a trader is number one, how much you're right and how much you're wrong, right? But secondly, how much do you make when you're right and how much do you lose when you're wrong? And this is the piece most people don't get. They're out there risking $1,000, but they get up 500 and they're going to take it. You're not going to survive very long doing that. But if you're risking $1 to make 2 or 3, you're risking $10 to make 30 or 40, then if you're right half the time, you're going to make a fortune. If you're right a third of the time, you're going to break even or make a little bit of money. And if you're looking for a formula or a strategy or a pattern that wins 100% of the time, you will be looking until you die. It doesn't exist, it never has, and it never will. If it did exist, it would stop existing overnight. Warren Buffett is wrong 40 to 50% of the time. Buffett does a similar risk reward. It's just he'll risk 40 or 50% to try to make 2 or 3 or 400. He's trying to hold stocks for a decade. Day traders might risk 1 or 2% to try to make 5 or 6. I'm trying to risk 8, 10, 12% to make 30, 40, or 50. And so how do we know how much to risk? Well, let's look at this shallowing pattern here. Okay? As this plays out, again, it shallows, meaning the pullbacks get less and less. And we know that because they're absorbing supply. There's a lot of sellers in here. Then there's less sellers. Then there's less sellers. Then there's less sellers, right? They're absorbing that supply. They're sucking the shares out of the market and putting them in their big vault to build a big position to ride higher. So we know that after each low, it should not go back below here. We know that after it comes down here and pushes all the way from 3 to 6, it shouldn't go to 3 again. It pulls back, it makes a new high. Well, at this point, it shouldn't go below here again. They've sucked all that supply and they bought it. It goes back to 6, it pulls back to 5 and 40, it pushes back up. Cool. At this point, it shouldn't go back below here again. And what these red lines end up being are your stop loss. That's the place you're going to set. That's where you're wrong, okay? If the stock broke out, let's say right here, well, you'd be wrong if it got down below here. So that'd be about a 33% risk. I'm not taking a 33% risk ever in my life. When it shallows out here and then it broke out, where are we wrong? At what price does the stock need to fall to say, nope, it's not doing what it should. It's not breaking out like I expected. They were not absorbing supply. Something changed. Well, I'm wrong right here at about $5.35. So that's my risk from where I buy to my stop loss. And in this case, that was at 10% risk. So I buy at $6. I put a sell stop order. We call it a stop loss. It's an order that says, hey, if that stock falls to $5.35, sell it immediately. Don't text me. Don't call me. Just automatically sell it if it falls to there. That's our risk. So we had a 10% risk. And how do we make out on the upside? Well, pretty darn well, right? So we risked 10%. We were up 40 in 18 days. You could have sold it all here. I'm not even going to tell you did anything wrong. You risked 10, you made 40, it took you 2.5 weeks. Great, do it again. Repeat, rinse and repeat. Same thing over and over. So what we have done is go from top to bottom. We say, number one, are we in a bull market? Yeah, abso-freaking-lutely. Where's the strength in the market? Where I'm seeing natural gas. We're seeing solar. We're seeing lithium. We're seeing clean energy. Clearly, it's in clean energy. Great. Let me look at the clean energy stocks. Here's one. Okay, now I've got a shallowing compression pattern. What do I know? I know some big institutions are buying up this stock. Great. I've got a strong market, the number one group, a good stock in that market being accumulated by institutions, and I've found a place where I can buy and risk 8, 10% and have a likely shot at a good upside. And so each one of these factors puts the odds more and more and more in your favor. You have the bull market at your back. You have the strongest group rising the most at your back. You've got signs of institutional buying, that consistent buying pressure likely to push it higher. And you've got the law of supply and demand playing out in a place where you've got a ton of demand, a little bit of supply should push it higher. That's it. That's it, start to finish. Anyone can do this. Questions about this? Is this stock still in play? No. I don't want it here. Where's the exact price of it now? Let me see. Well, I take it back. It is still in play. Would I buy it right here? No. But look what it's done. It made a big breakout off the lows. Okay. That was right in here. So what would I like to see to buy it again? Well, same thing I want to see to buy it the first time. I would like to see some signs of accumulation. It made this big run from 6 to 12. It's a 100% move. Do you think it's some selling, some shallowing? It's tightening up, right? Now, it's not picture perfect like the other one. I would much prefer to see this kind of do that right in there up against resistance at 12. And then if it breaks through, I'm going to buy it. My stop loss is going to be right in there. And again, I'm in a leading stock in a leading group with strong institutional demand with a 10% risk and a good chance I could make 40, 50, 100% over the next month or two. Same idea. Now, how many indicators did we use? How many proprietary nonsense secrets? How many double super secret trend indicators and MACDs and momentums and all that garbage? You don't need it. Listen, I could build indicators and sell them to you and make a fortune, but I can't sleep like you. Don't need that crap. You don't need it. You need a basic understanding of supply, demand, the markets, what moves stocks. That's going to make you money. We can throw a few moving averages on here. We'll use those for pullback buys and the like. But other than that, it's really pretty clean. And listen, all these fancy indicators these guys say they use, all of them come from the same three pieces of data: time, price, and volume. That's it. How many shares were traded, at what price, at what time and date. That's all there is. Those three pieces, they manipulate 87 different ways to make you all the fancy indicators of red and green lights and flashes and lines and crosses, and it's all nonsense. And if you want to learn more, click that link. It's $5 for a year, tradewithross.com. You'll get access to our market health patterns, our industry strength indicators in here. I'll give you the live sessions every week, access to our team, tons and tons of value. And you'll be shocked at what you can pick up in a month, 6 months, a year with us. All right, markets are open. Let's see what we got. Oh, let's see if this works. Y'all hear the bull market? Trying out some new sound effects. All right, so broke down here, a little bit of a gap down on the SPY. Not a big deal. Let's see how it holds here coming into the open. Canadian Solar, that didn't hold in here. Let's look at what's going on. Now, a lot of things gapping down here. Look at the clean energy list. A lot of red here. Okay, that's just at the open. CSIQ, nice little gap fill right in there. And let's look for some stocks to buy. Now, this is the one we bought last week, GLUE. I held it into today just to see. What are we up on this thing? Not a lot of money. What is it? $600. We were up 800. But why did we buy glue last week? Well, we looked at the market health and said, okay, pharmaceuticals and biotech, 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 biotech. That's the leading area. So we started looking to the biotech area. And while this pattern wasn't as, huge and perfect, clearly this stock's on the move. So from 4 to 14 in the last 2 months. And so if we zoom into like an hourly chart, you can see where we bought this thing and why. And we're just kind of dialing in, right? If you're in a strong market in the leading group with a good pattern, you can be a little loosey-goosey with it, all right? But look what we saw. Big move up, shallowing, 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 just perfect. And we bought right there last Monday. And it went up 14% in the first 2 hours. Now, it's kind of quieted the rest of the week. I would like to see this thing continue to run and go. But, was that hard? No. $700 in a couple of days. Really, we made that the first day. And we can look for a new one today. So let's see what's out there. Somebody mentioned LAC. Thank you. Lithium Americas. Yep, it's trying. So this is the stock that Trump and the U.S. government took a position in. So kind of meme stock activity here on a 200% run in 20 days. Obviously, that's not sustainable. But yeah, you're seeing exactly right. Let's go down to like an hourly chart. Maybe we can see this a little bit better. So do you see that same pattern off the lows? We're going to wait till they're accumulating. Coming in, not shallowing yet. Up, begins to shallow and shallow right up in here, right? So you can use this in stocks, in commodities, in crypto. This is going to be your bread and butter moneymaker in crypto. Because crypto has no earnings. There are no CEOs that step down. There are no mergers and acquisitions and stock splits. It's just supply and demand. This is going to work better than anywhere else. So yeah, I like LAC is trying in here. And really, I guess you could draw that line a little bit lower. Kind of right in there. So yeah, I think you could probably buy LAC in here. Now, the tough thing is, where's your stop loss? Down to the lows about 17%, which is more than I want to take. So I'd probably risk, somewhere in that 5 to 8% range on LAC in here. You can see on the daily, it's still a little bit squirrely. I mean, in a perfect world, I'd like to see a little bit more consolidation. If we could just get a few more days of kind of, this action tightening up nicely, I think you'd have a really good breakout here above that, call it 5.5, 560 area. And look, this thing's a mover. I mean, he did 95% in a day. This is a 30% day. Like, he could absolutely move. The ADR, the average daily range, is almost 8%. So you get 2 or 3 good days, you're up 20, 30% on this thing. On which chart was Glue posted? I don't know what you mean posted on a chart. We did it here in the last Monday's live session. We'll do another one. And I got a couple we can look at. Norfolk Southern. Now here's a stock, right? Does it look okay? Sure, it looks fine. But is that in a leading group? Are we seeing that railroads are leading the market? No. Now it's doing well. Don't get me wrong. Like, if I owned it, I don't see a reason to sell it. But I'm going to try to stack the odds in my favor. That link, again, if you want to join us, tradewithross.com. It's $5 for a year. No, this is live. The Nanny Wood Forest. I mean, your chart should look like mine. It is Monday, December the 8th. We're 6 minutes into the market. This is live. Oh, the ADR in the upper right corner. Thank Tim. You mentioned that. You commented. Yes. So the indicator there, if you want to add that, is this right here. ADR percentage / ADR LOD. Let me see if I can link this. How do I share this? I didn't make this. There you go. High population length. Tim, I'll see if I can put this in the chat feature here. There you go. See if you can click on that. All right, so let's find some stocks to buy, shall we? Now, again, the pharmaceutical, the biotech space leading, clean energy, those are the places I want to look at. And I did a little bit of scanning earlier this morning before the market opened until I was interrupted by my 3-year-old having a tantrum trying to get ready for school, but that's for another day. So here's a couple, and we could do this live. I'm just trying to save you guys the time. CYTK. looks very good. Now, is it a perfect setup as far as the clean breakout? No, but we're seeing the same idea. Big move up off these lows. We get kind of this shallow. It is drifting higher, which I don't like as much, but same kind of idea here. So you got sort of a breakout. This is Bible, not my favorite, being honest. IRWD is another one. You can see this big, strong move in here. We got what I call a retest entry, where it makes this big move. It wasn't a big shallow. It didn't get like months and months of it, but you see it kind of came in here, breaks out above 3.5, has this huge move, squats down in here. So this is sort of a second entry, a second chance entry if you want to buy this here. I think you could do so with about a 9% risk. I'd put a stop loss at 320. The reason being this big, huge day on Wednesday, this big high volume 23% day. I want to use the low of that day. It shouldn't go below it. If you've got a catalyst as such that you trade double the average daily volume on a 23% move, that should be defended. So I would buy here, put a stop at $3.20, risk about 8%. Let's look at some other ones. Now GHRS is another. You get this big pattern in here. So do you see how it's, this has been going on for like 3 months. This big shallowing pattern right up in here against the highs. So if you get a break above 15.5, I think this stock is buyable for a move higher. Again, leading group, big stock in that group. PHVS, this one, obviously the buy was Wednesday. I wish we were live then. But this one is really, really pretty. 16 to 26 in a week. And then just look at how the stock just beautifully shallows, absorbs supply. And Helen Keller could spot the breakout here. 26 it stopped. 25.5. 26. 26. 26. The market is telling you stock can't get above 26. That's what a supply is. That's what the sellers are. And listen, this could be one guy with 10 million shares putting a sell limit order at $26. And if that's the case, the stock cannot go above 26 until all those shares are purchased. And once they are, then the stock is free to go higher. And it went very quickly from 26 to 29 in just 2 days. Come on, get off here. So you could probably buy this here, take a little bit more risk, about 10%, 11%, but this looks pretty strong to me as well. Yeah, these charts are on TradingView. I've tried everything. It's the best. If you want, is there Black Friday still going on? Let me see. Oh yeah, Cyber Monday. If you're interested in charting, and I don't get $1 for this, I don't work for them. I have no affiliation with them, but their Black Friday, they do this once a year. It's Black Friday and Cyber Monday. I'm on the premium package, which gives me all the stuff I need. You're probably fine on the essential or the plus package, but they're all pretty much the same price. But yeah, this is the time to do it. So you got another day and a half on that sale if you're interested. And if you already have a membership, I always just add on a year at this time. What about TAC? I don't see it personally. It's made a big drop. It would need to absorb all that supply. You think about it like a stock in demand that these institutions are buying day after day and week after week and month after month. If it falls 10%, they're going to buy more. If it falls 15 or 20, they're going to throw the kitchen sink at it. So I guess it's only 25. It's not too bad, but typically it shouldn't make these big drops. Now this, on the other hand, would have been a perfect buy. And I know I'm Monday morning quarterbacking, but I just want you to start seeing this. Do you see how beautifully this just shallows in there for about a month? Comes out, gangbusters, nice flat base, big move higher. Shallows up, I'd be looking to buy again above here. It doesn't, it fails, I'd be out in here. Nice move higher. When to sell, go to my YouTube channel. I got a video on when to sell. There's several things I look for. I tend to I sell in two places. One's into strength, meaning it's up big. I'm going to nail down profits while I've got them. I'm not going to look a gift horse in the mouth. The other is selling into weakness. It rolls over. It's lost its momentum. The trade is over. I'm going to be out. Any Canadian stocks, especially in energy, you look at? Well, yeah, a lot of the solar companies are Canadian. So if you look at the solar space, like First Solar, isn't this a Canadian company? No, Arizona. Enphase. No. Some of these are. Jinko, one of these is. Jinko, so I think that's a Chinese one. Yeah. Sunrun. Well, I know Canadian Solar is. CSIQ. This thing having a heck of a month, right? But solar's a great area to look. Again, that's the go-to clean energy. Like now, if you go back when we looked at these in April and May, what we saw number one was nuclear and uranium, nuclear and uranium, nuclear and uranium, nuclear and uranium. And so, if we go back in time to back then, look, the stocks we bought were like SMR. See here that shallowing pattern off the lows. We bought this breakout and it just rocked. We bought OKLO, the other big nuclear stock, same time, same pattern, same exact everything. Right here off the lows as it comes in. Nope, not ready. Up, tightening, tightening, tightening. Got in here, and it goes from 30 to 70. Now, like I said, I'm not looking for stocks I can hold for 20 years. And if you ride a stock from 30 to 200 and you let it come all the way back down, we need to have a talk because you shouldn't, get out while the getting's good. I'm not saying you should have bought there and known to sell there. That would have been nothing but luck. But you buy at 30, it goes to 70 in 2 weeks, sell some damn stock. If you bought this breakout, the shallow and coming in tight, and you get in here at 85, it goes to 130 in a week, sell some. Big move, sell some. You're not going to get it perfect. And then when it breaks this low, I'd be out. If you're trying big, I would definitely be out when it broke this low. Like, I'm not going to ride through all this nonsense. But that's not my goal. I just want to make a nice, quick 40, 50% and get on with my life. You can sell some, hold the rest, see if it keeps going. We could do a whole class on when to sell. What do you think about calls on PHVS? Yeah, you could do calls. I mean, the pattern's really clean here. I think you could do call options if you prefer. APA's breaking out. Yeah, maybe. It's got all these highs. It's still got supply up here at 25 and change. So I wouldn't quite call it breakout. But you're right. It is doing, it is kind of doing what we want to see. It's trying to shallow up a little bit here. Biotech is 37%. Why not checking out the sector? Oh, we are. Yeah. The first couple I showed you were biotech. We can run through some more. Absolutely. We'll kind of do a lightning push through. This is a buyout, you can see. This is CYTK, which we just covered. Again, I think it's still buyable in here. It's $1 or $2 above where I'd like to buy it, but I think you buy it here. You put a stop loss at, call it 62.5, so you risk 7%. It's on the move. It's doubled since September. Everything looks great. CYTK, great biotech. ARQT looks good. And a lot of these are like, yes, it looks like it's going higher. Would I buy it here? No. Why? Because I want precision. Like this was Natera. Big move up from 100 to 180. And then the shallowing, nice and tight. You can see clear as day the resistance. 180, 180, 180, 180, 180. When it gets through, you buy it. Would I buy it here? No, it's just a bit extended. Like the stock is up 30% in the last month and a half. But if it stalled here for a couple of weeks, absorb that supply, the potential sellers, the profit takers, then yeah, it's probably ready for another run higher. Now Moderna, it's in the right group, in the right market, but the stock looks like a dog turd. I don't want this. It's not showing me any signs it wants to go higher. It just made a new all-time low a week ago. Not interested. No signs of accumulation. Look at ROIV. Look how beautiful this was. Nice. And this is just, 2 months ago. And if you bought it, you're up 80%. EXEL. Choppy, I see nothing. Crystal Biotech looks great. Do I have a clean breakout? No, but you may just want to ride this trend and buy it up in here and trail a 10 or 15% stop. ALNY. Now it's not ready. Why? It started to look like it wanted to go. Had this big move, began to shallow up, and now what's it doing? Now it's making lower lows. Like it can do it once, but I want it to tighten. I want the pullbacks getting shallower. I want signs that there's less people selling, not more. And the best example of this was Bitcoin. How many Bitcoin guys we got here? I know y'all hate it when I do it, but I don't do it to stir up comments on YouTube. I do it to try to save y'all money. And I did a video over in here on how Bitcoin's probably going to 78,000. I said 78,000 and 60,000. And everybody, oh, this is FUD. And please don't use the word FUD. It lets me know you're a toddler. Oh, he's just stirring stuff. Like, no, I'm not. I'm trying to help you. And if you listened, you saved a ton of money. Now, why was I saying it's probably going lower there? Because it was expanding, not compressing. Look, I was bullish on Bitcoin in July because it put in this beautiful little pattern here. It made a big run higher. It began to shallow, now it loosened and then sucked right back up. That shows you there's big demand, tighten. I recommended buying it right here. And initially it did great. It went up, 10, 12, 11% in a week. And then it came back and revisited our breakout area, which is fine, as long as it doesn't break below. Broke off, made a new high. Okay, we're on the road. And then it broke through here. And it broke below our low. And then it went up and it rolled back. And okay, maybe there's legs. It's starting to go. It's made a new high, right? And then what happened next? And it came all the way back down and made a new low. It broke the breakout area. It broke these lows. Like, it's not tightening, it is widening. That's distribution. That's big guys getting out. And so once it broke that low, again, lower high, lower low, I said, all right, I want to short Bitcoin if it'll get to 108 to 112,000. Now, why would I want to get short there? Let's just play this back in real terms. Well, that was the big area, the big support resistance zone. I mean, just draw a line on your chart. See this area in there? Whoops. Back here in May, it's resistance, resistance, resistance. August, September, support, support, support. That's the area. So if it bounces back up, I wanted to sell short or buy puts in this area for a move lower. And it went just about there. Didn't quite give me an entry. It went to 107,000. I was looking for 108 to 112. But it would have been a great little entry on the short side. Just ride this thing down. And I know the Bitcoin people are diehard, and you guys hate hearing this. And, oh, you just stack and hold. Okay, fine. Diamond hands, all your little cliche things. But, again, it's just supply and demand. I'm not taking a stance on whether the dollar is garbage and the money prints and all. That's true. But it's just about supply and demand. If more people are selling this than buying, it is going to go down, and it has. Look what's happened. Every little rally has been sold. It rallied again. They're dumping it today. I stand by my targets of 78,000, and that was going to be kind of a retest of this low right in here. And then if it falls that, where's it going? It's going to the last place it found acceptance down here in this kind of 60,000 range. Jack, I love you. Yes, Jack gets it. He said, if you flip your chart, do you see your break? Watch this. You can right-click in TradingView and invert the scale. It's going to flip it upside down. Look at that. Now, was it absolutely, perfect? No, but it's the same kind of thing. It's coming in. They buy right back up, and then it shallows and breaks out here, up, one little retest, and it's off to the races. It's exactly what I would look to buy. The problem is the chart's upside down. So this is why I wanted to sell it. Again, we're looking at no indicators, no earnings, no fancy indicators. We're just analyze supply and demand. Folks, I could teach you how to do this. Click the link below, tradewithross.com. It's $5 for an entire year. I promise if you join me every Monday morning for an hour from now until December of 2026, you will be light years ahead of everyone else. I've got another analyst, Jean Fade, who's really sharp. You get a live session with him every Thursday. You can add these to your chart. I saw a couple of people asking how to get them. When you sign up, you're going to go to this page. And anyone who's already a member, I'll put it here in the chat. Industry strength. And I'm going to take all y'all stocks here in just a second. So give me just 1 second. Click that link I put in there. It's going to take you to this page. And all you got to do is put in the email address you signed up with and your TradingView username. Hit submit, and we'll authorize you. And then you're going to come into a chart. You're going to hit indicators, and it's just called the TA. That's Traders Agency. Industry strength. See it right there? It's got a lock because you got to get approved. It's just for our members. But again, it's $5. Add it to the chart. There it is. Whoops. And then you can adjust the settings. So this is showing you the 5 over the last 1 month. But all you do is, okay, I want to see 1 month. I want to see 2. I want to see 3. I want to see the best, call it 8 groups. I'm going to make this a little bigger because my eyes aren't as good as they used to be. I'm going to hit OK. And there it is. And you can add 6 and 12 and everything else. And just make this, one of your chart layouts. And you'll stay abreast of the top areas of the market. And you'll know where the strength is and where the money's flowing. What caused a temporary halt to trading? The stock moving too much on news. INBX. I don't see a halt on trading. Yeah, if a stock is halted, that means like, oh, there's some news out and it's up 100% or it's down 80% or whatever, and it's called a circuit breaker to give the market a chance to adjust to it. Anything in natural gas looking good? Yeah, so I was looking at the natural gas stocks as well. We can do that together here real quickly. I didn't see a ton that looked really good. And the tough thing about natural gas, it's just not a big mover. So you have to understand that some stocks are going to move bigger than others, like biotechs, tech companies, AI, semiconductors, nuclear, like a lot of those stocks. And just look at the ADR up there in the corner. A lot of those moving 7, 8, 10% a day. Natural gas, most of these are slower moving stocks. These are more like a Walmart or something. But some of them look okay. Like Western Midstream, okay? It's starting to kind of shallow up and compress there. Occidental, which is a big play from Buffett. You can see it's trying to kind of form a rounded bottom here off the lows, kind of coming in and tightening up. And so this could be a potential one. Now, is it a big mover? Not really. I mean, this record rally off the April lows, even that was only about a 30% gain. So you want to kind of adjust your stops and expectations accordingly. Like, if I'm buying a stock like SMR, I mean, look at this thing. It moves on average 10% high to low per day. When it gets going, it goes up 100, 180%. When it falls, it absolutely rips your flesh off. It falls 70% in a month. Like, it is a mover, right? But if we're looking at FANG, and I think this is very viable right here, Diamondback Energy, it moves. But a good breakout is 30% over a couple of months, okay? So I think Diamondback looks great in here. I mean, it's got everything we want to see. It's been compressing for 6 freaking months. It's finally getting legs and moving out. It's breaking out today. Buy it. You could buy FANG here. Now, where would I risk? Not a lot. I mean, I'd risk about 5% on this. I'm not going to put my stop loss all the way down here and risk 13% because I know that if I get 15, 20% over a couple of weeks, it's a pretty good move. So I need that to be a multiple of my risk. Do you ever trade the power hour? What do you mean by the power hour? Forgot to put a stop loss on Bloom. Oh, man, I'm sorry. Yeah, this is one we looked at, and it was like a nice little pullback buy to the 50. It did jump initially. We bought right in here. It was up 20% in 6 days. Obviously, it came out and failed, and it's coming back. So it's getting a little bit squirrely. I'm not really loving the action here on Bloom Energy, but, this is a clean energy stock in a good trend and a good market. We bought the dip. It's kind of chopping around here right now. Can you show iron on your chart? Yeah, IRON, Disc Medicine. I think this looks good. And again, I'm going to just go back in time, and you can see that initial, kind of shallowing breakout over in here from October. It goes from 60 to 90, beautiful. And, again, when a stock makes a 30, 40, 50+% move very quickly, it needs to absorb that move. And people see this, and we've had a really strong market for the last 8 months, and the NASDAQ falls 4%. Like, it's over, it's falling. And I'm like, guys, we need this. I know it's not fun today or this week, but if a stock just goes straight up forever, it's eventually going to crash hard. You need to absorb that supply. There are people up 40, 50, 60%. There are people who are 5x leveraged. You need them to get the hell out of the way, get rid of that supply, absorb it, and get ready for another move higher. And that looks like what iron is doing in here. It's natural. When you don't get it, you get this. It didn't really have any pullbacks. It goes up, it triples in 3 months on just a story. Listen, I'm there for the ride. I'll take the money. I did. But you have to know that what you're setting up is it's going to be eventually a big crash. And we saw that back in the 90s with the dot-com bubble. Stocks like Circle, CRCL. Remember this that came out, the digital dollar? I mean, it IPOs, it jumped pre-IPO, and the damn thing went up 350% the first 2 weeks. That's unsustainable. And it tried to come in and shallow, but then look, broke the low, retest of it, sold off. And once again, if we flip this chart upside down, you see it. I mean, this would have been a buying area for this stock. Big move, shallows, tightens up right here. I want in this area for a ride higher. So if we get into a bear market and you're looking for stocks to short, do yourself a favor. Just flip all your charts upside down. You have the exact same thing, just in inverse. And that would have been your short entry there at 120. And you had a great move. And look, it's the same thing, right? Like instead of absorbing supply, this is absorbing demand. Oh, we're selling. We're in charge. We're dumping this thing. Oh, look, some people still want to buy it. Sell more. Oh, there's a few people that want to buy it. Sell into it. A few more buyers. And once there's no more buyers, you just wipe the floor with them. Right? All right, let's look at some stocks. Give me a lightning round now. Heads up, I got 770 people on my channel. There's a couple hundred more on the Traders Agency channel, so I'm going to do my best to answer all your questions, but they're probably going to come in lightning fast here. So let me just kind of run through them. And again, if you haven't already, click that link, tradewithross.com. Join us. It's $5 for a year. By the way, if you're watching this as the recording, please feel free to put stuff in the comments. Those do pop up on my phone. I do my best to try to come back and answer those as I see them. I want to help out in any way I can. How's our glue trade doing? Not really following through, but my guess is it's going to break out here and run again. We'll stay with it. All right, let me look at some stocks. Power hour, last hour of the market. Not really. I mean, I don't avoid any given time. Like these breakouts, I'll take it at the open. I'll take it at 11:27 a.m. I'll take it whenever it happens. I don't really care. Micron, MU. Yes, looks good. Strong move. Retested a 50. Quickly bounced. A little light on the volume in the bounce, but I think it looks good. Micron, no issues there. Just bought some FANG. Okay, good. I think it's a good buy. Nice little breakout. Yep, we covered that one. It's in the natural gas space. It's a good stock in the right group, in the right market. All the odds are in your favor. FET, love it. Yes. What is this thing? Forum Energy Technologies. So it's a little bit small, only $300 million. Not going to be a ton of institutions getting into this thing. Streets product, oil, natural gas. All right, there it is. Oil and natural gas. Yeah, looks great. Now, I showed you the picture perfect pattern so that you can kind of squint and blur your eyes a little bit on the ones that aren't perfect, but we're seeing the same kind of thing. Same strength, coming in, shallowing, tightening up. Yeah, looks really good. Like it. FET. TE, T1 Energy. Yeah, a little sloppy, but nice, strong recovery. I mean, dips in here and just bought up like hell. So this, I'll often see these, and I call this a shakeout move. Man, look how pretty this pattern was off the low here. Look at this thing. Just, I mean, textbook stuff right here. Look at that. Oh my goodness. Big drop from 3.5 to $1. Got absorbed that supply. It comes in and just shallows. And look at this last little handle from the company. 1, 2, 3, 6, 7 days, and then breaks out. Big strong day, 14%, close into the high. One little retest at your second possible entry, and then just rocket ship. This is just beautiful stuff here. Yeah. Yeah. So it's, again, it did show some weakness. But man, it has recovered quickly. What I would really love to see here, and you may not get it, you can just buy here, but I'd love to see a little bit of tightening in here to final absorption and just break out. But yeah, this looks really good. I like it. Good pick. How do you build your watch list for a particular sector? Super easy. And let me show you how to do that. I got a video on this, but I know you're not going to go back and look, so I'll just show you. All right, give me a sector you want to build a watch list on, and I'll do it for you live. And look at a couple other stocks in the meantime. Give me a sector. We'll build it together. Matt, BLDR, Builder First Source. It wouldn't be my pick, right? It just made a new low. This is clearly in a downtrend. Building materials, which was heating up over in here, is no longer a hot area of the market. HBio. Yeah, that's a little guy. I mean, it's a micro cap stock. Look over here to the right side of my chart. Market capitalization, $35.5 million. Now, small cap stocks are defined as those between $300 million and $2 billion. Mid cap, $2 to $10 billion. Large cap, $10 to $100 billion. Mega cap over. So you are 1/10 the minimum threshold for a small cap stock. So very, 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 very thin. Institutions aren't touching this stuff. They can't. It's not big enough. Does it look good? Yeah, but it's a volatile little sucker. I mean, if you got to step out, it is doing what we want, right? You're seeing some of that absorption. I get it. I'm with you. It looks good. Take a stab at it. But, these are normally almost impossible to trade with a little 8 to 10% stop. So if it were me and I'm buying this thing, all right, I'm going to give it 25, 30% room. And what that means is I'm going to take a much, much smaller position to do so. But, yeah, I mean, it looks good like it's coming out of a stage 1. By the way, this is logarithmic scale. This is regular scale. It just evens out the percentages. All right, did you give me a sector? Adam, 1,000 ounces of silver, my man. I got a couple thousand ounces myself. I'm sorry. No, 1,000. I got around 1,000 as well. Biotech, Bruce says. Okay. Yeah. AG. Look at that monstrous rip. I mean, beautiful. Now the clean buy, like where I prefer to buy if I can find it, is in a move like this. Here's the big up. Nice shallowing. See, I can buy in here. My stop loss is there, not risk a lot of money. Now, this is a big V-shaped recovery. But silver is ripping. I mean, it's just ripping. And the case is, listen, side note for you guys on this, listen to what the market is telling you. Okay, what we have right now is a NASDAQ index that is ripped from the lows. We have huge CapEx spending. We have interest rate cuts. We have GDP growth. We got this all this stuff's happening. And in that environment, when everyone should be going stocks, in that environment, the best performing asset of 2025 has been gold. Now, this is telling you something. When the stage is set for a huge bull market, which we are getting at the same time, gold and silver are outperforming stocks by a factor of 2 and 3. it is telling you loud and clear that fiat currency faith is at a low, that debt continues to rise, that inflation is going to ramp up and get worse. So listen, inflation rises to almost everything. It's houses, it's cars, a loaf of bread. It's also stocks. But the big go-to for inflationary hedges is gold and obviously silver as well in the metals. So I got 25% of my long-term retirement dollars into the metal space. Just my advice to you, have some exposure to metals. I think, again, this is going to double again. I think silver is going to double again in the next couple of years. But anyway, somebody said biotech. Okay, so biotech's a tough one. There's a lot of stocks. Let's be a good example. All right, so here's what we're going to do. If you've identified an area, again, all these come with our membership, tradewithross.com. It's $5. We'll give you unlimited access. So he's saying, all right, biotech strong. Biotech is strong. Biotech. He wants to build a biotech watch list. All right, perfect. Here's how you're going to do that. Let me open up my browser. What you're going to search is whatever the sector, in this case biotech, ETF, exchange traded fund. Now, exchange traded funds, if you're not familiar, are the modern day equivalent of mutual funds. And they trade just like a stock. And what it does is allow you to get broad-based exposure to a basket of biotech stocks or gold stocks or European stocks, whatever that may be. And so let's just pick one of these, the Spider Biotech ETF. All right. Now, all of these ETFs are required to report their holdings publicly once per quarter. It's online. So the State Street, that's the big one, biggest money manager out there. Yeah, cookies, whatever. You're just going to go and click on holdings. And that's going to give you their top holdings by weight. So the higher they are up this list, the more weight. Let's look at the daily. Oh, we can download it. Perfect. Sometimes they list it. Sometimes you can download it. What did it give me? Here it is. So this is what they've given us. And let me blow this up. Let's just make these percentages. Whoops. No, it's not the exact percentage. Anyway, okay. All right, so here's the big names. Exact Sciences, Revolution, Avidity, Insmed, Natera, Regeneron, Madrigal, BridgeBio, Ionis, etc. All right, so we've got all these names. And again, it's usually going to be on the page, whether it's this or on an Excel spreadsheet, doesn't really matter. So then all we're going to do is go in here, click on your drop down. And if you don't use TradingView, I don't know how it works, but this is how you do it in TradingView. And you're going to create a new list. And we're going to call this biotech stocks. And I'm going to put a little asterisk. I think I already have one named this. Okay. Save. Perfect. There's our watch list. Nothing in it. Hit the plus button. And just start adding tickers. EXA. Well, let me just do it this way. See if I can. There we go. There's our tickers, okay? EXAS, enter. RVMD, enter. RNA, INSM, Natera, Regeneron, Madrigal, BridgeBio, Ions, Biogen, Amgen. Now, this is a big list. So I would just take the top 20, 30, 40 of these, etc. I'm not going to do it all, but you get the idea, right? And so then you have a watch list. And at any point, you can come in here and select your biotech stocks list and just fire through them. And you're doing it by weight because whatever they have the biggest position in, they're either the most bullish on or is the most liquid. So, just take the top 10, 20, 30, 40, whatever. And that's your watch list. Make sense? No need to overcomplicate it. All right. A lot of stocks. Let me see if I can run through these. Robinhood. Yeah, it's a bit long in the tooth here. Big pull up, big dips, breaking low support. I don't think it's the best time to buy Robinhood for my strategy. Not saying it's bad, but I don't love it. CDE, yep, coming in nicely. It's not a perfect pattern here, but it it is coming up off the lows. It wouldn't be my first pick, but it's strong, good lithium play in there. I mean, I liked it before on the pullback. PAR, yeah, I mean, good uptrend. Oil refinery, prefer to clean energy space, but you can see nice little breakout kind of over in here. Had a little failed breakout initially, but nice little cup with handle, shallowing action, moving higher, looks good. Google, this is going to have the wind at its back with Buffett's buying. So yeah, I mean, looks good. It's not a perfect entry point, but nice trend. CCJ, yeah, Cameco, and you can see a couple of patterns here on Cameco. Again, I talked about nuclear and uranium being the top leading groups in April and May, and you can see the breakouts from there, how well those did. We had another one here in September, move, retest, nice bounce higher. It is trying to defend this area. The big line in the sand for Cameco is $80 a share. So far, it is doing so. If you bought it, risk about 10 to 11%. If it breaks down below this 78 or 80 area, the party's probably over in the short term for Cameco. Plug Power. Yeah, I mean, it just got eviscerated. So this is going to be a good place to buy eventually. I don't think it is compressed, and I just don't think it's ready. If it will continue to absorb in here and show me signs, then yeah, I'd buy a breakout off this rounded bottom, the consolidation off the lows, because it is a huge mover. It's the exact kind of stock we want to own. I just don't think it's ready. I think it needs to set up better, and it may never set up. AMCR, yep, still like Amcor a lot in here. I know we had some insider buying in this stock as well. Nice, big tightening pattern here in Amcor, so I think that looks good. I just got a paid subscription to TradingView, how to get the indicators I need. Chris, if you click, I did a video on my channel on how to a walkthrough of TradingView. It's like 20 or 30 minutes long. If you got the time, I try to cover everything in there. And if you have questions, just shoot me an email. I'll be glad to answer those. PTGX. Yep, this thing, I mean, very, very strong. You don't always get that big forming pattern. So sometimes, like if even a big stock in a leading group like this, I'll take anything. I'll take any like this was a big move up. This was a decent little shallowing right in here. But then we just got kind of a flat base for a week or two. That's fine. I just want to, after a big move, I want to see some kind of consolidation before the move higher. So, yeah, I think PTGX looks good up in here. Very strong, good stock, good group, great trend, lots of momentum behind it. Decent ADR, yeah, looks good. BW, is that this? Babbitt and Wilcock. It's very, very thinly traded. This must be over an ADR. Average volume is $92,000 a day, so very, very thin. I'd have a hard time getting in and out of this, but it does have a lot of strength. That's your thing. Netflix, wouldn't touch it. Wouldn't touch it. Why? It's expanding. We're getting lower high, lower low, lower high, lower low, lower high, lower low. It's trending lower. Again, here's a good litmus test. Flip your chart upside down. If it looks better, you're in the wrong stock. Okay? How many stocks do you recommend owning at any given time? That's going to be tough. It's different for different people. I mean, obviously in my retirement account, I got a lot of diversification. In my trading account, where I usually keep a couple $100,000. In a good bull market, my goal is to be concentrated in somewhere in like 4 to 10 stocks. I want the biggest names, and it's, you can't always just pull a random Tuesday and find perfect entry points into the stocks you want. But, if AI is leading theme, I want some big leading, your, oh, goodness. You want your Nvidias, you want your AMDs, you want your big AI names. If it's pharmaceuticals and biotech, you want the big names in there. And if I get really clean buy points, and I personally am happy to put 25-30% of my account to a single name. If it's a great setup in the right group with a tight stop, sure. T1 we looked at, that continues to surge today. ACN, yeah, really nice. Now it's an IT stock. What do they do? Accenture, Digital Core, stuff I don't quite understand. Okay. I'd look more to the company and the group, but yeah, the pattern off the lows is beautiful. That's a perfect buy point. And I'd like to see a high volume day. I'd like to see it finish on good volume up here in the 260 plus, closing at the highs. But yeah, really nice. I mean, you see exactly what we want to see, right? Nice little tightening action. Got resistance here at 250, 250, 250. It's trying to break out today. Looks great. I like it. ACN. Yeah. Boyle is about to boil, he says. Let's see. ProShares. Well, yeah, it's natural gas. Sure. Ultranat Gas, which I guess is this the 2X leveraged ETF? Leveraged ETF, 2 times return of natural gas. Yeah, so it's just, giving you exposure to natural gas, double long, which you can probably do since it's not a super volatile asset. But yeah, nice, big, rounded bottom. This is what I call a shakeout move in here. In my opinion, these strengthen the setup. So notice we were coming in and tightening, and we like to see it do this. Instead, it broke there, so it ran all these stops and then ripped right back higher. And to me, that's like one last little shakeout saying, all right, well, a lot of people probably have stop losses in this area. Let's ding their stops. Let's do a big sell order at the open and buy the heck out of it. So all the people sell, great. They're creating new supply. They're chasing your stops and buying it back up. So yeah, this actually looks pretty good. I'm going to knock this down. I wouldn't mind taking a little trade in this if it breaks out above, if we can get here above 37 change. It looks good. Monster, MNST. Yeah, really strong. Little fun fact, this is one of the top 10 stocks since 2000. This thing's gone from split adjusted price of 5 cents to $75. I mean, from drinks it tastes like horse urine. Amazing. Incredible. Yeah, so don't think you got to get into stuff you don't understand. This is a great example of stuff that's in your wheelhouse. Some of you may like Monster. No offense if you do. More of a Red Bull man. CTRA, Coterra Energy. Yeah, really nice. Looks good. Little kind of cup with handle pattern there. Breaking out the highs. Yeah, I support that. Looks good. Grail. Yeah, I mean, look, a lot of strength in here. Obviously, consolidation after the big run up, broke through. So kind of giving you a little retest. If you missed the breakout, my second favorite buy area is the retest. So that'd be kind of this 96 to 102 area. So yeah, I think you could buy Grail here. I don't want it really to get back inside this base. I don't want it, back in here. So buying it in this area is not a bad place to do so. It's got a huge move. Medical specialties, what do they do? Technology for early detection of cancer. Oh yeah, absolutely. That fits into that biotech pharmaceutical kind of theme we're seeing here. So good $4 billion company. It's almost the perfect size right there, kind of mid cap level where the big guys can really start buying. Yeah, this looks great. I like Grail here. What's the best ETF to buy? Silver. I just buy SLV, the iShares Silver Trust. It is backed by physical silver. It's going to move just about lock, stock, and barrel with the price of silver. If we compare the physical silver spot price to it, I mean, they're right on top of each other. and give or take a fraction of a percent. So SLV is the one I go to. Nuclear sector is getting hammered right now. We got to wait till that tightens up. And, you can do the same thing with the ETFs. Like, this was, a look back in here. It was coming in and tightening up and made a nice little move, but it's really rolled over. Lower high, lower low, lower high, lower low. Try to see if it'll find buyers in this area, but I just don't think it's ready. Again, if I was looking for something I could hold for 4, 5, 10 years, yeah, absolutely. I'm going to look at nuclear. Absolutely. I'm going to look at a lot of these stocks that are cheap. But, if I'm just trying to swing trade, get into some of these that can make big moves pretty quickly, I want to follow the strength. How are you buying gold and silver? What do you use? So in my 401k account, I've got GLD, which is the ETF. I've got SLV. I've got GDX, which is the miners ETF. Physical. I've been using APMEX. I don't know. Maybe there's a better broker out there. I like this guy I've been buying. And one of the reasons I like him is they've got storage. They've got a little company called Citadel, which is their holding storage company. It's Brinks does it. And so I used to have it shipped here. Then I realized, wait, people know my name. I've got 2 small kids. I don't need 6 figures in precious metals in my house to give people a reason to break in. So I started sending it there. They charge, I think, 0.5 basis points per year. So in other words, 0.5% to store it all for you in a Brinks protected vault. They'll deliver it to you if you want it sent, if you want it when you want it. And that's what I do, but I'm not saying that's the right way or the wrong way. All right, look at a couple others. We're about out of time here. I'm going to, we bought Big Bear over in here. It's a really nice move. I don't think it's the best time to buy it. Again, just too volatile. It's still making these, 45% drops. It started to get legs and it dropped 30%. Like it's the opposite of what I look for. So not my favorite time. So me, yep, $5 for a year. Mark, risk management for account funded at 50 grand. Show math for position sizing, please. Okay. Here's what we're going to do. Here's how I would do it. All right. $50,000 account. Rule of thumb, this is regardless of your account. Well, I take it back. If you got a really tiny account, you got to take more risk. But rule of thumb is 1 to 2% account risk per trade. Now, that means when you're starting out and you're new at this or the markets are kind of iffy, that's going to be 1%. When you get really good and you're up 40, 50 plus % on the year and you've got the theme, you know what you're doing, go up to 2%. That's 1% risk per trade, okay? So I try to keep my stop losses under 10%, and I've covered how to do that today, right? You're buying a stock, you want to put a stop below that little swing low. So let's say 10% trade risk on that trade. You're buying it at 100, you're going to put a stop loss at 90. All right. That 10% needs to be 1% of the account. So that to me tells me if I do a $5,000 trade at 10% risk, that's going to give me $500 of risk, which is 1% of my account. Okay? I back in. Now, let's say on the other hand, I had a setup that was really tight. Like the thing comes in, it's up, it's shallowing out, it's tightening really, really tight in here. I'm buying the breakout right in here. My stop loss is here. And that risk from where I buy to where I sell is only 5%. Boy, that's bad. Can't even read it. Anyway, 5%. All right. So that's going to mean your position sizing can be bigger. Because this math we just did is for a stock you buy and risk 10%. If you're trading a slower moving stock where the swing low is 5% below, okay, great. On that trade, if I'm only risking 5%, Well, that means I can do a $10,000 trade. Because buying 10,000, risking 5%, I'm at the same $500 risk. If I find one that's really volatile, it's making big moves, but I really want it, but I need to risk 20%, I just go the other way. I say, okay, on this one, I'm going to buy $2,500 worth, because at a 20% risk, that keeps me at that $500. And so when you're risking 1% of your account per trade, you can screw up a lot. You can run into a bear market. You can take 7, 8, 9 hits in a row until you realize, okay, this is not working, without getting yourself into big trouble. If you're risking 10% of your account per trade, then you take 4 losses and you're just about cut in half. And so what this does is allow you not to risk too much of your account, allows you to size up on the less volatile, less risky stock, so that if you're in a stock that's only going to make a 10, 15% move, you can make just as much money as the one that could move 40 or 50 that's more volatile. And it gives you kind of a floating scale. Now, let's say you started a $50,000 account and we fast forward 6 months and, your account is at, your account's at $80,000, okay? Now, at that point, you're upping this as you go. So as you're doing better, you're putting more dollars in, you're risking more. So in this case, you could take, instead of a $5,000 trade, take an $8,000 trade at a 10% risk to keep, your roughly $800. What you can also do is say, all right, I'm up 60% on the year. I got a good market. I think I know what I'm doing. I'm going to up the risk. Okay, I'm going to go to 1.5% or maybe 2%. And at that time, you can bump this to a $16,000 trade. Same 10% risk. Bumps that to $1,600, which is now 2% of your account. So know your number. Know, what 1% to 2% of your account is. That's your risk. And just do some quick math. Figure, all right, if I'm willing to risk, just have $500 per trade or $700 per trade or $50 per trade, whatever that is, and then back into that. Does that make sense? Okay, hopefully that makes sense. Somebody said S-U-U-N. I think you probably meant S-O-U-N, SoundHound. Let's see. Yeah, you probably meant SoundHound. Yeah, SoundHound is in selling, so we needed to consolidate again before moving higher. Now, we've traded this stock in the past. I mean, we bought breakouts there. We bought breakouts here. This is just an absolute big mover. I think long term it's a great stock, but it's also very volatile, right? Right now it's in decline. Whoops. So if you're buying this long term, that's one thing. But if I'm trying to buy a breakout on this stock, and this could happen here, it could come all the way down to 2 before it does this. I don't know. But if it's going to get legs again, I need to see signs that it is being absorbed and consolidating and bought. And right now, all I'm seeing is lower prices. Again, different time frames, different strategies. If you like, this is a great stock. I like their voice recognition patents in the AI space. I think they're going to get bought out. I think it's a $200 stock a decade or 2 decades from now. Sure. Just don't look at it, buy it, check on it a year later. And look, we were recommending this stock, years ago, back here at $2 and $3 a share. So the people who bought it there on that recommendation, at one point they're up 1,000%. Now they're only up 400. Like, that's the nature of these smaller, more volatile stocks. So I don't want to say, like, if you're buying this long term, I don't want to shake you out of it and say it's not the time to buy. But you have to understand, if my goal is to swing trade, to get in stocks I can hold for a month, 2 months, 3 months, make a nice quick boom there, this is the pattern I want to look for. All right, guys, we've covered a lot today. Obviously, there's more we can cover in the future, but we're an hour and a half in. I'm going to go ahead and end the live session here. If you haven't already, click that link. It is tradewithross.com. It is $5 for an entire year. You're going to get access to our industry strength indicator, the live sessions with me every Monday, the live sessions with our other analyst, John Fadday, every Thursday, in addition to lots of other bonus material, trade picks, access to our support team, bonus report, tons of stuff. It's the best $5 you'll spend. Click that link below. And again, if you're watching this recording, please feel free to ask questions down there. I'll do my best to answer them as they pop up on my phone. Otherwise, I'll see you all next Monday. Thank you again for being here. Hope you're having a wonderful holiday season. And I'll see you next week.